traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, the 23rd day of October, 2014, and this is the daily report for gold and silver. We've got a raging dollar again, a raging equities markets again. We do have platinum and gold trading strongly lower. Currently, we are looking at 1231.80. That puts gold off about $10 on the day. The low, 1226.20. The high, 1244.60. Silver is trading higher this morning, just slightly higher, up about 4 cents, just a little bit above $17 per ounce, 17.19 current print. In terms of the low and the high, the low is 16.97, high 17.26. More on silver in a little bit. So traders, first to our current trade, we did move our stop yesterday. Traders who've been with me for a while probably recognize that I recognize some weakness or a failure to take out certain points. So in terms of that trade, we took a hit of roughly $4 on the trade, considering we took 25 on the profit side on our last trade. I'm okay with that. The key is that we're never going to always get it right, but we've got to maintain as prudent of a risk-reward ratio as possible. In other words, minimize the drawdowns, try to maximize the winning trades. Although it sounds really easy and good in theory, in practicality, it's a little bit harder to accomplish, as I'm sure all of us are aware. But I do believe that we got out of this last trade absolutely unscathed. Now, what was I looking at? What really determined that I felt that way? Well, let's take a look at the 720-minute chart. And the one thing that we can see, and I talked about this yesterday, is that as this market came up, we typically will see a market from the fall. I'm counting the fall as this point here to here. We will typically see a market rate or go up anywhere between 50 on the low end and 75% on the high end in terms of a target area. So we took one play in here. We made money on the way up. We re-entered, of course, thinking that we had some more room on the upside, which at the point that we entered the trade, which I believe was 1244, we did, because I was expecting the market to be able to break through this 50% retracement level and move to what we kind of call our sweet spot. And of course, the sweet spot is this area between 50 and 75%. However, that was not to be, because as this market went up, we realized that we had dramatically strong resistance coming in at the 50%. That's 1251 right here. You can see that it raised a little bit above that, but as I saw these red candles starting to come in and backing off, that's when I was pretty convinced that what we were looking at is either one of two things. The first possibility is, and let's start with a fresh screen, of course, but the first possibility is that we're still in rally mode, but what we're seeing is spikes or waves within the rally. In other words, impulse, counterwave, impulse, counterwave, and so forth are 5 waves up. That's one way to look at it. That's one model to look at it, I should say. The other model to look at is that we've had these series of lower highs and now lower lows, and as we do that, this now is a lower high when we compare it to the last high, and we had this small rally come up, we've got a lower high, and now we'll go and retest this record level here and possibly even break it, because we would need to see a consistency, in other words, a series of lower lows with the lower highs if the market's going to continue down. Now, as we get into the end of the year with the dollar raging and the equities markets so strong again, my sense is that there's a real potential to see further downside in the market as opposed to a continuation of this rally. Now, of course, it's fundamentally based and anything can change at a moment's notice, but that is my current take on gold. So once again, traders, we got in at 44, we got out at 39.50, took a loss of 450 on the trade. As I said, we're not going to hit them all, but the key was I believe we really came out of this unscathed. We got out $8 above where the market is. Maybe the prudent move would have been a straight reversal going short, but I'm trying to play it a little bit more conservative than that. I wanted to guard our equity rather than thinking of making profits at this particular juncture. So traders, I've talked about the potential for a continuation of downside pressure. This is a 2-day chart. And what I've been looking at in terms of the broad picture, the broad view, is this real similarities between when the market was trading at this record high and we had these series of tops at 1800. Market finally breaks. When it breaks, of course, it breaks below this point of 1534. We get this tremendous drop. And just as we had this flat bottom here, I believe we've got a flat bottom here. We've got this triple bottom right now. And at the same time, we've had a series of lower highs. So in other words, if we come up and fail, we most certainly, I believe, have that potential to break through this particular price point, meaning 1180. Will we do it this year? I'm not really looking at so much of a timeline as what is really possible. So traders, what about silver? Well, I've pulled up this long-term chart. It's a daily chart, and I draw your attention to the series of bottoms here. We'll draw a line across it as best we can, and you'll see that we're pretty much dramatically at this point. This, to me, is a pretty critical level in silver because if we break through this particular point, realize we've already broken through these series of support levels here, which were just at about 1820. But if the market continues under pressure and we break through there, that doesn't bode well for silver at all. And really, to see where it could go, we're going to have to really change this a little bit into a weekly chart to see where it could go. And traders, as you can see, if we actually break this particular point right here, and these are just trend lines that I drew in based on these lows right in here, but if in fact that happens, we have a series below it, but really the next real level of support wouldn't come in till about $15. Now, I'm not that dramatically bearish yet, but traders, I have to let you know we are below this point here. We really, on a technical basis, only have this level here, and that's only, $1 plus from the area that we're at. My sense is that we'll probably find support at around 1680, but we are in treacherous territory on a technical basis. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for the weekly wrap-up and review. Bye-bye.